Hello, everyone. Welcome. Welcome to today's session from the UNJSPF. We are here today to present to you essential information about separation from service if you have at least 5 years of contributory service, but you separate before you reach your early retirement age. So this week, we have a series of briefings in English, and next week we will have the same topics in French. So if you happen to have attended yesterday, that was our session for those who separate with less than 5 years of contributory service. Today, we're focusing on those of you who have at least 5 years of contributory service, but haven't yet reached age 55 or 58, depending on what your early retirement age is. Tomorrow, we'll have a third session at the same time, which will be for those of you who have at least 5 years of contributory service, and you'll be separating at some point in between your early retirement age and your normal retirement age. All of this information is going to be on one of the slides, but also it's available on our website under the resources menu item, where we have the topic pension town halls, and that's where you can find the links to these sessions and the recordings and presentations from all of our previous town halls. So for today, we have reserved an hour and a half. The plan is to go through a presentation, and then we'll have some time for you to put any questions into the Q&A. Just a short period of time. We won't be answering these questions in writing, but the questions will be monitored so that we can answer live the most relevant or frequently asked questions that are related to today's topic. And we will announce when that Q&A will open. It will be later in the presentation. So I would kindly ask you if you could follow the presentation. Maybe your question will be answered already during the presentation, but if not, you will be alerted to when the Q&A will open and you can put your question there. Okay, I'm going to share my presentation now, just a moment. Okay. So this is the topic. If there's any technical issue, just please alert me. So this is what I mentioned about the sessions this week. This week, we're the 14th of May, and we are in the session about having 5 years of contributory service, but not yet having reached your early retirement age. Tomorrow is another session, and then next week will be the similar session topics, but in French. The link to the pension town hall sessions is on this slide, but also available on our website. In these presentations, we try to make the pension information more approachable, more easy to understand, but as a disclaimer, if there is any discrepancy, it is our regulations and rules which are the authoritative source of information. So for today, we're going to look at what options you have if you separate from service after 5 years, but before reaching your early retirement age. What benefit options will you have? And we will describe them, explain to you how they are calculated. And then we'll show you how you should prepare for your separation with respect to your pension benefit. And finally, we'll look at our website and member self-service and the resources available to you there. Much more information than we'll be able to cover in this short presentation, but mainly we want you to know where you can find the information, and if you still need to reach out to the fund, how to contact us. So without going into great detail, I want to remind everyone that we're all participants of the UNJSPF, which is a defined benefit plan. And this is the type of plan where you contribute monthly, as you probably notice from your salary slip, and the amount that you'll get, the pension benefit that you'll get or be entitled to when you separate from service is not dependent on the investment return that of that money that you've paid in. It's based on a certain formula according to the fund's regulations. So this is something to keep in mind when I describe the benefits that are going to be available to you when you separate. Your retirement benefit is guaranteed. If you have at least 5 years of contributory service, when you separate, you will be entitled to choose a monthly pension benefit in one form or the other. So today we have this specific group of you who will not yet be early retirement age, and I'll describe to you what benefit option you have. Basically, the longer you work and the higher your earnings were, the higher your pension benefit will be. This is how the formula of the retirement benefit is calculated. So back to the defined benefit plan. You have your contributions on the left. So you have contributions coming from your salary every month, and your employer is paying twice that much on your behalf every month. We also have, going into this big pool of investments and contributions, the investment income. From this pool of money, we pay for the administration of the fund, and we pay all of the benefits that the pension fund pays. So that is retirement benefits, survivor's benefits, disability benefits, child's benefits, and this is for you to understand that all of this is being pooled into a common pot from which we pay the benefits. When we speak about your contributions, though, we talk about just those that you have contributed from your salary. So not the organization's share, but your contributions, although both do go into this pool. The fund has received a number of queries recently about the solvency of the fund, and this slide is reminding you or letting you know that we have had some town halls on the topic, and we have had some articles posted on our website to inform you. Generally speaking, the fund is in a secure position, and if you would like to read up or even watch the recording of the town hall, then you can find the links here in the presentation, which are also, of course, directly available on our website. Okay, so now we're going to look at what type of benefits we will pay when you separate from service. Yesterday, we talked about those who separated with less than 5 years of contributory service. They have just one option, that's the withdrawal settlement. But for those of you today joining who have at least 5 years of contributory service, when you separate, you will have an option of a monthly retirement benefit. Because today we're focusing on those who haven't yet reached your early retirement age, the benefit that's available to you in the form of a monthly retirement benefit is called the deferred retirement benefit. And I'll describe it in a moment. So because we're focusing on the early retirement age and the fact that you haven't yet reached that, it's important for you to know what is your early retirement age. The early retirement age goes along with the normal retirement age. And your normal retirement age is determined by the date that you joined the pension fund. If you joined the pension fund on or before January 1st, 1990, your normal retirement age is 60. And with that, your early retirement age is 55. If you joined the pension fund on or after January 1st, sorry, I think I might have misspoke, but if the first group is before 1990, the second, if you joined on or after January 1st, 1990, your normal retirement age is 62. And with that group, your early retirement age is also 55. The normal retirement age changed to 65 in the past, 20 or 11, 12 years, sorry. The normal retirement age for those who joined the fund on or after January 1st, 2014 is age 65. And with that, the early retirement age is 58. So if you know what your normal retirement age is, then this is how you can see what your early retirement age is. It's going to be either 55 or 58. For the deferred retirement benefit, it will be an option for anyone who separates before they reach their normal retirement age. But for those of us who separate before we reach our early retirement age, it's the only form of a retirement benefit that is an option for us. On this slide, we have a few scenarios. We have the first scenario, which is for those who have a normal retirement age of 60. I'm going to focus on scenario 2, which is with a normal retirement age of 62. The principle is the same. It's just that the normal retirement age is different depending on when you started contributing to the fund. So assuming that most of us have a normal retirement age of 62, that means our early retirement age is 55. If you separate from service with at least 5 years of contributory service, and you're not yet 55, your options are a withdrawal settlement, which is a one-time payment of your contributions and interest, or a deferred retirement benefit, which is a monthly benefit for life. Those are the only two benefit options available to you. And this is the same principle, but if you have a normal retirement age of 65 and an early retirement age of 58, if you separate before age 58, you will have the option of a withdrawal settlement or a deferred retirement benefit. So that's the main thing to take away from this, is to know what your normal and early retirement age is, and that if you separate before your early retirement age and you have at least 5 years of contributory service, meaning you've paid into the fund at least 5 years, these will be your two options. Withdrawal settlement or a deferred retirement benefit. You can't have both. You have to choose one or the other. But if you're not sure which one you want to choose, you have up to 36 months from your separation date to make a choice. And some people do this because they expect to be reemployed and re-enter the fund. So they just leave their money with the pension fund and they can come back into active participation within 36 months, and their participation is considered continuous. You just pick up and start contributing again, but there will be a period when you were not employed that you cannot make contributions. But if you are not reemployed and you don't re-enter the pension fund within the 36 months, you will need to make a choice of either option 1 or option 2. Okay, so before you get to that point of making a choice, we're going to look at some of the things you need to understand and which will help you to make the choice between those benefits, or whether you're going to wait up to 36 months to make a decision. One thing we suggest you do is to look at your annual pension statement. This is a record of your pension contributions and interest, your days, months, and years of contributing to the pension fund, and what rate we use to determine how much you were contributing each month to the pension fund. So this annual pension statement is produced every year, and it is a balance of your pension at the end of the calendar year. So as at 31 December of each calendar year. The statement for 2024 is being finalized and will be available before the end of the month. So most likely next week, it will be available inside your member self-service account. And the one that's there now, the most recent one, would be the balance for the year 2023. So if you haven't registered with member self-service, we're encouraging you to do that, and that you should review your pension statement regularly every year to see if there's anything that looks like it's not accurate, or if there's something that you have questions about, that you address it before you get to the point of separation, so that if there is anything, even something like your name being misspelled or your date of birth being incorrect, or a period of a break in service that isn't recorded, then that's why we suggest you look at this on a yearly basis, so that any discrepancies can be addressed before you separate from service and will not cause any delay in processing your pension. We also recommend that you run an estimate of your future benefit. So that's another reason to register with member self-service if you haven't yet. That is where you can put in a separation date sometime in the future, and you run an estimate, and it will tell you what options you have and how much your pension would be. So now back to the annual pension statement. This is what it looks like. If you have been in the pension fund for quite some time, this used to be mailed to you, but for the past years, it's no longer being sent by mail. It is available in your member self-service account. So that is where you will need to go to retrieve and review this document. If there's any discrepancies in the personal data, we suggest that you first review that with your HR office or your SPC secretary to see about getting that corrected, or if your marital status is not correctly reflected. And also just a reminder, keep all of your personal data up to date with your employer. If your marital status changes, if your family composition changes, you have to report it first to your employer, who then reports that data to the fund. Then under section B, you'll see your contributory service. In this example, the person has 12 years, 2 months, and 27 days of contributory service. And under that section, we see their total contributions and interest as at the 31st of December. The interest is accrued at a rate of 3.25%. It's compound interest. And then section D would be if you added other contributions through restoration and validation. Otherwise, there will not be any entry there. And then in the section E, your annual pensionable remuneration. Your pensionable remuneration is an amount which you might have noticed on your salary slips at the top if you have a Moja pay slip, for example. And it's an amount that states it's your pensionable remuneration figure. Now, this amount is not what your future pension will be. It's an amount that is what we use to determine what your monthly pension contribution is. It's set up in a scale similar to a salary scale, and it corresponds to your level and step, but it's used only for determining your pension contribution. So the higher your level and step in your salary goes, the higher your pensionable remuneration rate goes, generally speaking. There's only one scale worldwide for professional staff and higher, and that's reflected in US dollars. For local staff, the pensionable remuneration rate is listed as one of the line entries in your salary scales. So it's basically the equivalent of your gross salary and any pensionable allowances like language allowance. And that amount is used only to determine how much you pay per month to the pension fund. And the amount you pay is 7.9%. Now, of course, these figures are reflected as a yearly amount, so you divide by 12 for the monthly amount, and then 7.9% of that is what is deducted from your salary and reported to the pension fund. If you're a local staff and you are paid in a local currency, the contributions are then converted to US dollars because the pension fund is a US dollar-based pension fund. Okay, then the second thing we suggested you do to prepare for separation is to run an estimate. If you are in the category of today's session, which is that you're younger than early retirement age, and you have at least 5 years of service, then your estimate will look something like this. You will have two options. They're highlighted here. The full deferred retirement with a yearly figure in US dollars, and the other highlighted amount is your withdrawal settlement, which is a one-time payment of your contributions and interest. Now, just to point out that entry underneath the deferred retirement benefit is the amount if you were to choose this benefit and then pass away and you have a spouse who's eligible to receive a surviving spouse's benefit. That benefit is half of what your benefit is, as you can see in this example. Okay, now we'll go into a little bit more about your benefit options. So I've stated already that you have these two pension benefit options, the withdrawal settlement or a deferred retirement benefit. In this video, which I will not play right now, but it is one of the many short but really helpful and clearly explained videos that we have on our website. These are in English or French or Spanish. And in this one, benefit options, it's a very succinct way to see what your options would be depending on your retirement age and when you separate, etc. So I really recommend you take a look at this video to prepare for separation. We also have eligibility charts, benefit comparison charts on our website, which lay it out in a text if you prefer that to video. So this is another source of information for you available on our website where you can see what your benefit options are depending on your situation. So for now, back to the two benefits that we're focusing on for today's session. The withdrawal settlement. It's a one-time payment. It's your contributions plus the compound interest. The interest is accrued only up to the date that you separate from service. So even if you leave your money there and take up to 36 months to make a decision or possibly try to find another job that you then re-enter the pension fund, the interest does not accrue beyond your separation date. And when we refer to your own contributions, just to be clear, because this is a frequent question, we're talking about the portion that you paid from your salary. Okay. It's a one-time payment, and after that, there's no other benefit option. You cannot then still choose to get any kind of monthly benefit. There's no survivor's benefit in the event of your death. There is, yeah, that's, I guess, just to make it clear, this is a decision that you're taking one settlement, one payment, and then your relationship with the fund is complete, and there's no further benefit payable for that period of participation in the fund. This is to illustrate how the calculation works. So if you have less than 4 years of contributory service, the withdrawal settlement is your contributions and interest paid out to you. But for today, we're talking about those of you who have at least 5 years of contributory service. So if you have anything over 5 years of contributory service and you take a withdrawal settlement, you're going to get your contributions and interest plus a bonus amount. And that is at an increase of 10% per year for each year beyond the first 5. So for example, if you separate with 7.5 years of contributory service, let's say your contributions totaled $40,000 and the interest came to $10,000. That's $50,000 together as an amount of your contributions and interest. You get an increase for the 2.5 years that you have contributed beyond 5 years. So 2.5 years times 10% gives you a 25% increase. That, in this example, would be $12,500 extra for a withdrawal settlement of $62,500. And this is basically how the withdrawal settlement for those with more than 5 years is calculated. As a second example, if you had 15 years of contributory service, those 10 years extra would get you a 100% increase. So $120,000 of contributions and $60,000 in interest, with a total of $180,000, with a 100% increase for the 10 years times 10%, meaning your withdrawal settlement would be double what you have as your own contributions and interest. And even if you contribute more than 15 years, the maximum increase is 100%, but it's 100% of your contributions and interest. So the longer you contribute, the higher your contributions will be. And if you have at least 15 years of contributory service and take a withdrawal settlement, your increase would be 100%. So in this example, $280,000 with 100% increase would result in a withdrawal settlement of $560,000. So as I said, we often get the question about what happens to the organization's contributions. Why don't I get those paid out to me? It's not part of any calculation of the fund's benefits, but as you can see, for example, in this case, you would end up with a withdrawal settlement that is higher than what you paid in, plus the interest that your own contributions earn during your participation. So if you'll recall that illustration of the pool of assets and contributions, from that pool we pay the benefits. For example, this is one where the payment is more than what your own contributions and interest were. So if you think about it in that way, perhaps that will answer some of your questions about what happens to the organization's share that is paid to the fund. Now, This slide is about restoration, and basically what we want to highlight is if you take this withdrawal settlement payment and you re-enter the fund at some time in the future, it doesn't matter how many years or have passed in between the payment of your withdrawal settlement and when you re-enter the fund at some point. You can restore this most recent withdrawal settlement payment. You can pay it back to the pension fund along with interest, and we will restore the contributory service and add it to your new participation. So if you separated with 10 years of contributory service, took a withdrawal settlement, and then at some time in the future, you came back and were again a participant in the fund, and you didn't want to start from you'd have to start again from day one and build up, and you would need to have at least 5 years of contributory service before you would have the right to any type of retirement benefit. But if you choose to restore or pay back the withdrawal settlement, you can put those years of contributory service into your new participation. And therefore, you would become vested or have the right to a retirement benefit when you again separate from service, because you would have added those years of contributory service. So the main thing to know is that if you take a payment and you come back, you can pay it back to the fund, but you have to make this choice within the first 12 months of re-entering the fund. We strictly apply this deadline, and we do have a lot of information on our website to advise you about the process, but just be aware that if you do rejoin, you can pay this money back and then add to your contributory service. So that was the withdrawal settlement. The second benefit option that you have under today's topic is a deferred retirement benefit. This is a monthly benefit for life, and in the event of your death, if you have an eligible spouse, so someone you were married to when you separated from service and remain married to at your time of death, that spouse would be entitled to a surviving spouse's benefit for life. The main thing to be aware of with the deferred retirement benefit is that because you're separating at a young age, before you've even reached early retirement age, you're not able to start receiving payment of this retirement benefit immediately upon separation. You have to wait until you have reached at least your early retirement age. So let's say you separate at age 50 and you choose a deferred retirement benefit. By default, we think you're going to wait until you're 62 or 65, whatever your normal retirement age is, before you start asking for the payment to start, or before the payment starts. But if you want to start taking it early, the earliest you can start receiving the payment is your early retirement age. Now, the amount will be reduced if you choose to start taking it early. But as you can see, then you wouldn't be able to start getting the payment immediately upon separation. So that's one thing to be aware of, but it is your only option for a monthly benefit for life. The longer you have contributed and the higher your level and step, generally speaking, the higher your pension will be. So if you can, the closer you get to your retirement age or early retirement age, of course, the higher your benefit will be, even if you don't start receiving it immediately upon separation. The formula for calculating a retirement benefit is here on this slide. We refer to your rate of accumulation, which is ROA, times the FAR, which is your final average remuneration. And that is how we get to your annual pension amount. But just simply speaking, it means the longer you contribute, the higher your rate will be. And the higher your level and step, the higher your pensionable remuneration will be, which then means the higher average rate you will have at your time of separation. One thing to be aware of with this final average remuneration, we look at the highest rates in your last 5 years of service. So we take the highest average 36 months out of the last 5 years. So that's something to be aware of. If you have a career in which you changed different categories, for instance, of employment, or definitely moved from different levels and grades, the rates and the levels, and therefore the pensionable remuneration rates in the last 5 years of your service are going to be the ones that count in the calculation. And we will take the average highest 36 months worth of them in your last 5 years of service. On this slide, these are the factors that we use. If you wanted to get into more detail about how we calculate your retirement benefit, we look at, as I said, the length of contributory service and how that gets converted into a percentage. So on the top right of this slide, we talk about rate of accumulation. The longer you serve, the higher your rate or your percentage will be. There is a maximum rate of 70%. So even if you were to contribute for longer than 38.75 years, your rate of accumulation, this percentage, is capped at a maximum of 70%. Now we take that percentage, which as you can see is based on periods of time, and a certain percentage is applied for each of those years. And we look at the pensionable remuneration rates, and multiplying those, we get your pension amount. A few more things about this deferred retirement benefit. It is a monthly benefit for life. As long as you have 5 years of contributory service, you can choose this as your pension benefit, regardless of your age. When you start being able to receive it is dependent on your age, but you can choose it regardless of your age. It is a monthly benefit payable for life. It's adjusted for cost of living over time. If you run your estimates and see the amount, it is going to give you an amount, assuming you wait until your normal retirement age to start receiving the benefit. If you start taking it as early as your early retirement age, or anywhere between that age and normal retirement age, the amount of your benefit will be adjusted with a reduction factor. So the reduction is applied, and then you will get a lower pension amount, which will then be paid to you for life. And I mentioned that there is a surviving spouse's benefit attached to it. So you can see the difference between the withdrawal settlement and the retirement benefit. The withdrawal settlement being a one-time payment without any survivor's benefits or any further entitlement, whereas the deferred retirement benefit is a monthly benefit for life with a surviving spouse's benefit attached. In the event of your death, that spouse would be entitled to a surviving spouse's benefit for life, which is half of the amount of your benefit. And the retirement benefit is adjusted for cost of living. So, what else do you need to know? There is no lump sum option. If you have heard any other town halls about the lump sum option with the early or normal retirement benefit, please be aware that there is no lump sum option with the deferred retirement benefit. There's also no child's benefit payable with this benefit. If you choose a deferred retirement benefit and you later come back to the fund and you haven't yet started receiving payment of the deferred retirement benefit, and you want to restore a deferred retirement benefit, the fund has, in the past 2 years or so, has a regulation which allows this type of restoration, although because it's cost neutral to the fund, it's most usually not advantageous to merge this benefit back into your new participation. But it is an option. If you inquire, you need to do so within your first year of re-entry to the fund if you're reemployed. And we would provide you with an estimate so you could see whether it's advantageous or not. The main thing is to be aware of the deadline. Just like with the restoration of the withdrawal settlement, this type of restoration also has a 1-year deadline to apply. Now, I mentioned in one of the earlier slides, if you don't know yet which of these you want to choose, if you don't know if you want a withdrawal settlement or a deferred retirement benefit, you can take up to 36 months to decide. Or, as we see often, participants leave and they don't make benefit choice. They say that they want up to 36 months to make a decision, and they are looking to again become a participant in the fund. So if that happens, if you rejoin the fund within 36 months, your participation will be continuous. Your former pension will just be joined and continuous with the new one, with a break in between where you didn't pay contributions because you were not employed with the member organization. So again, to remind you, there's no interest that accrues on your contributions beyond your separation date. Now, I mentioned break in service, and the break in service is not contributory. So you cannot pay voluntary contributions during a period when you were not a staff member and not eligible. So that period between contracts will just be a period that you don't have contributions into the fund. If your break in service is more than 36 months, so let's say you separate, you don't make a benefit choice, and 36 months is approaching, the fund will remind you that you need to make a decision. If you don't make a benefit choice and you have at least 5 years of contributory service, we are going to assume that you have chosen a deferred retirement benefit. So if you want to have a withdrawal settlement and you later come back to us and say that you wanted a withdrawal settlement, but we've already assumed you have chosen a deferred retirement benefit, we would not let you restore the withdrawal settlement as normally you would if you elected it within the 36 months. So there's some deadlines to just keep in mind. The best thing is you make your decision before the end of the 36-month period, and we can advise you, again, if it's a withdrawal settlement and you later return to participation, you can restore that by paying back the withdrawal settlement plus interest. If, however, you don't make a benefit choice, and we assume then that you will have chosen a deferred retirement benefit, then you have this monthly benefit set up that will go into payment when you reach normal retirement age. But we still will reach out to you to let you know that we haven't heard from you. And the best thing is, please keep your contact data up to date with the fund so that we know how to reach you, so we can advise you properly, and that you can always reach out to the fund through the Contact Us form or to your SPC secretary if you're a participant in one of the specialized agencies, so that you know what you need to do if you're not sure what benefit you want to choose at your time of separation. And once you do make a benefit choice and the payment has been affected, you cannot then say that you want to change your choice of the benefit. So once we've paid your withdrawal settlement, you can't say, oh, I don't want that. Actually, I think I want a deferred retirement benefit. So it's important to run your estimates, make an informed decision before you actually put what your benefit choice is on your payment instruction form. So this next section is on separation from service. What do you need to do, like, on a practical level? And I mentioned payment instruction form. This video will go over the process very simply. So we talk about how you, the participant, has responsibilities, your employer has certain responsibilities, and the pension fund, as the third party, has a responsibility so that your pension benefit can be processed for you. Now, what do you need to do? We suggest that you register with Member Self-Service and that you run at least one estimate with the separation date that you think will be the date you separate. Check your annual pension statement to see if the data is correct. If there's anything that doesn't look correct with your personal data, you contact your employer, your HR office, or your SPC secretary if you're with an agency. If there's any questions about if you had part-time employment, for instance, if you had breaks in service, if you aren't sure whether they're reflected there or how they're reflected in your pension statement, you can ask, so we can clarify that those employment history details are reflected correctly. Another thing to do, which you're doing today, is attending a pension town hall. And as just a reminder, we have more coming up, and we have recordings of previous town halls. And then lastly, we have we have e-learning modules where you can go into more depth about pension topics. These are free, but you'll need to register. And the link is there on our website where you can choose which modules you'd like to follow. And it's under our resources tab. If you have any questions, we have a contact page where you can reach us with your questions. So those are some practical things to do to prepare for separation. And to look at our website at some of these resources, that we have videos about separating, we have information about the separation process, what your benefit options are, how to submit documents to the fund. So depending on your employer's requirements, you can submit documents either directly to the fund, or some employing organizations ask you to provide your documents to them, and then they transmit your documents to the fund. Lastly, about taxation, the fund does not provide information about taxes because we don't know all the tax laws in every country, but there is a link to some tax information on our website, and we know that often people have these questions, but generally we say please consult a tax expert in the country where you will have your tax obligations. Now, running an estimate. Once you're in Member Self-Service, you have a tab where you can run the estimates, and all you need to do is put in a separation date and click Submit Request. You wait for the calculation to be complete, and then you go to retrieve the results under the Documents tab, and it will be in the form of a PDF document. For every estimate you run in Member Self-Service, you'll save automatically the results, and they'll be under the Documents tab. So if you want to put in a few different separation dates, then you can see what your estimate results will be. And they're saved there under the Documents tab for you. You also find your pension statements there. So look sometime by like the end of next week for the newest pension statement. And in the meantime, you can review the pension statement for 2023 and prior years. But the most recent one right now is from 2023. This is another example of what your estimate will look like. We're assuming, of course, that you're not yet your early retirement age. So you have the two options, full deferred retirement benefit and withdrawal settlement. The full deferred retirement benefit amount is a dollar amount, a yearly amount. If you wait until your normal retirement age to start receiving that benefit. If you want to start receiving that earlier, and the earliest is as of your early retirement age, the amount will be less than what's quoted here on your estimate. We're working on improving our estimate module so that we can show you what the amount would be if you started receiving your deferred retirement benefit at your early retirement age. But I'm sorry, we don't have that available yet. So just be aware that if you do choose to start taking your benefit earlier than your normal retirement age, it will be less than what's quoted here on your estimate. That reduction will be applied, and then we'll come to a new amount, which will be a lower amount, and that is what you would get per year for life. It would be subject to cost of living increases, but then it's not going to automatically go up to any higher amount when you do reach normal retirement age. Sometimes we have questions about that, but that's not how it would work. You either wait till your normal retirement age to start receiving it, and it's the amount as quoted on your estimate. Of course, it's an estimate, but it's going to be reduced if you choose to start taking it early. We have a separation checklist, which is also on our website, and this is handy if you want to really go through step by step what you need to do. So I've already mentioned a number of these things, and on the right-hand side, you can see you have even a little tick box where you can check off what you need to do. You need to fill out your payment instruction forms. You need to attach a copy of a recent bank document or a bank statement with your name and account numbers so that we can ensure that the data that you put on your payment instruction form matches your bank account. And then third, we need a valid government issued ID with your signature and photo so that we can verify your identity in that way, and your signature would be there. Ideally, it matches what you sign on your payment instruction form. If you are choosing a deferred retirement benefit, because there's a surviving spouse's benefit attached to that in the event of your death, we also ask you to additionally provide a marriage certificate and the ID document of your spouse. And if there's any divorce decrees also, then we ask you to provide that. this is a list of what I've just mentioned, and the last item on the list here is about the PENS A2 form. This is a designation of recipient of a residual settlement in case you were to die before the amount of your own contributions and interest has been paid out to you. So if you take a withdrawal settlement and you're already paid that, there's no residual settlement payable in the event of your death after you've been paid your withdrawal settlement. But let's say you die in service, then the amount that is equivalent to your contributions and interest is what would be paid out as a residual settlement. If you don't have a spouse who would be entitled to a surviving spouse's benefit. So we have more in-depth information about this form to fill out. If you provided it when you first joined the fund, you can submit a new one at any time if you want to change who you designate. It can be one or more persons, it can be charity, and we will honor the most recent document, but we do need to have it as an original. We need to have your actual signature on the document. We don't accept electronic signatures on this or on the payment instruction form. Now, from your employer, we need several separation documents before we can process your benefit. So I mentioned that we have the responsibilities of you, the participant, your employing organization, and then the pension fund. So your employer needs to send us these two separation documents. One is from your payroll office, and the other one is from your HR office. And once we receive these two and your payment instruction form, assuming there's nothing irregular or incorrectly completed on the form, no discrepancies, then the processing time is 15 business days from receipt of all of the separation documents. For you, you can find your payment instruction form, which is Form PENS E7, because I'm speaking to those who have at least 5 years of contributory service, so this is the form for you. And you can find this in your member self-service account, or you can take it from the website under the Forms tab. If you take the form from your member self-service account, it will be pre-populated with your name and your unique ID, which is your 9-digit identifier that we ask you to put on your form. This is a view of page 1 of this PENS E7 form. There's a lot of information here, but just be aware that if you want to take up to 36 months to make a benefit choice, then when you separate, fill out only page 1 of the payment instruction form. This way you let us know that you want to take up to 36 months to make a benefit choice. You need to put your name, your contact details on the form, your unique ID, and you date and sign it. We do require you to sign it, so you need to sign a hard copy, and give us only this form if you want to take up to 36 months to make a benefit choice. On the other hand, if you already know, or when you later decide what you want to take as a benefit, then you fill out page 2 and 3. This is page 2. This is where you choose the benefit that you want. And on page 3, you fill out the banking details. So for us here, I'm just highlighting the two options that will be available to you. On the left is the page 2. you'll need to tick the box, only one box, which is either the deferred retirement benefit, or you're going to choose and tick the box for the withdrawal settlement. So you only can pick one, and then you date and sign this form, and then on the page 3, you put in the banking details. So on the right-hand side of this slide, you see it's a screenshot from our website. Under Resources, I have highlighted the Forms tab. There we have all of our forms, including this PENSI 7, with a tutorial on how to fill it out. So I won't have time to go into all the details, but please be aware that on the previous slide you had arrows and information about how to fill out the form, but we also have a tutorial on our website that will explain to you how to complete the form. The main thing is to know page 1 if you want to take up to 36 months to make a benefit choice, or pages 2 and 3 when you're ready to say which benefit you want to choose. And for the audience today, you'll have benefit options C or D, and you can pick one. Okay, now about separation, I said we have the mandatory separation documents that we need to get from your organization and from you. How do you know, how can you tell if we've received them at the fund? Well, in your member self-service account, under a tab that's called Proof Documents, you can track when the fund receives these documents. So on the left side of this screen, you can see 3 documents listed at the bottom. Those are the 2 documents from your employer and the payment instruction form from you. On the right-hand side, you see the same screen, but there are dates filled in. So that means we've actually received these documents. Once we have a date filled in and we've received them, in most cases, then you can see that within 15 business days, we would process your benefit. If you don't have a date there yet, then you would need to contact where the missing date is. So if it's you who hasn't turned in a payment instruction form, or you can see it hasn't been received, then that means, yes, that we're still awaiting something from you, or it could be that we're waiting from your organization. Okay, now to go through the pension toolkit. I think now we're going to open up the Q&A for a few minutes to allow you to put in some questions if there's anything that remains unclear. And please, if you do put in a question, please don't put in anything too specific and personal about your own situation, because we wouldn't be able to look into your record and answer it in this global session. And also, please keep it to the topic of today's session. So just for those who are in this category of not yet being early retirement age. Thank you. Okay, this is a screenshot of our website. This is our homepage. And you can click on what your situation is and get to relevant topics. So if you picked separating or retiring, you'll have links to the benefit options, about benefit estimates, and then this will take you to pages where you'll have videos, information pages, and another way to get to certain topics is if you go under our Resources tab. You have not only our regulations and a special page for member self-service, but you have the forms. Under the forms menu item, there's the e-learning modules, the link to all the pension town halls sessions that we've given since last year, the beginning of last year. We've started hosting them and we record them and have the presentations available there. All of our videos and booklets. So if you like to look at information in a written form, you might want to consult our booklets. We have one on separation, for example, and these are in English, Spanish, and French. Sorry, some are in Spanish. They're in English and French, and some are in Spanish. On our videos, we have these in English, French, and Spanish. They're hosted on a web YouTube channel, and you can subscribe to our channel. You will access them for example, through the website, but just so you're aware, they will open up in YouTube. And I really suggest you take a look at these. They're short and they're very informative and make the topics easy to understand. And being short, it's easy to repeat and watch them again if you didn't catch it all the first time. More about our website, you can subscribe to our newsletter. I encourage you to look at our website regularly for the latest articles and news. And then member self-service. This is where you will go to either register or later, after you've registered, to log in to your member self-service account. To register, you need your 9-digit unique ID. This is a number that the pension fund assigned to you, and it will be the same number throughout your relationship with the fund, even if you have multiple participations. The 9-digit unique ID should be the same throughout your time. If you don't know your unique ID, you can request it at this specific email address or through the Contact Us form. And if you're registering and you have some issues, you can consult a specific email address for our MSS support, or again, through the Contact Us form, just choose that you need assistance with member self-service. When you register, we encourage you to use a personal email address, because if you forget your password and you get a password reset email sent to you and you're no longer employed with the organization, you most likely can't access that email account anymore. So use a personal email address when you register. And if you have already registered, you can go into member self-service and change your email address to a personal one, so that when you separate, you will not have this issue of not being able to access the email account anymore. And then the dedicated page to member self-service has a tutorial about how to register. It shows you what is available. I've shown you some screenshots with the different menu items and how you can run estimates and so forth. And this is all here through this page if you need more assistance with that. This is what it will look like. You click the member self-service, either login or register tab, or the member self-service login at the top right of our website page, and you get here and you have to follow the process to register. Once you're registered, this is another screenshot of the different menu items. Again, I think I'll emphasize the Documents tab to look at your annual pension statement and your estimates once you've run them. E-forms to find your payment instruction forms already populated with your name and unique ID. And then the Estimate tab. And then for some of you, if you're not with a specialized agency that has required you to provide documents directly to them as a participant before you separate, then you would have this option to provide your documents yourself through your member self-service account by uploading a scanned version. So you still need to print the document, the payment instruction form, for example, sign it with a pen, and then scan it, and then you can submit it through MSS Document Upload, and the fund will accept it as an original. Again, this is where you get your pension statement and your estimate results under the Documents tab. And then how to contact us. We have a page called, with the menu item at the top of our website called Contact Us. And when you click it, we very recently updated this page, so I hope it will be even easier for all of you to know how to reach us. You can send us an email, which is through our contact form, and you'll get a ticket item or a case number so that you know we've received your query. We have a phone, we have a call center, a contact center who is available 24 hours a day, 5 days a week. And we have a long list of toll-free numbers by different countries. If you click the phone icon there, you'll see all the toll-free numbers. In person, we have walk-in services in New York and Geneva on Tuesdays and Thursdays, and the times and conditions are there, so you know important information about that. And then submitting documents, so you have the mailing address or the address if you send by courier. And I think the main thing is, because now I think we're going to go to the questions, is to please just have a look through all of this information on our website, register and look through your member self-service, run estimates, and know how to reach out to either your SPC secretary or to the fund, depending on whether you're with an agency or part of the UN family, and that you're well prepared before you separate. And now I think we have some time for questions. And I see we have a lot of questions.
Yes, we do indeed. So hello to everyone. We are going to go over some of the questions that you submitted. However, I will say we received in, I think, 3 minutes or something, over 100 questions. So it will be difficult to address them all. I will select some questions. I've gone through maybe half of them so far, and I have a sense of what some of the questions are. There are a lot around deferred retirement. So I guess we are going to dive a bit back into that. There are also some questions about, can people make voluntary contributions to reach a certain duration of contributory service, and so on. So the first question is actually related to something that we cannot cover, which is about ASHI and ASHI coverage entitlement if you elect a benefit from the fund, a retirement benefit. And I will not hand that over to Denise, but just say we do not administer ASHI, after service health insurance, in the fund, and really cannot answer any questions in that regard because we're not equipped to make eligibility determination. For ASHI questions, please address that to your HR or directly to your ASHI provider. So the first question for Denise is the following. If a deferred retirement benefit is adjusted for cost of living, even before it starts to be in payment. So if you could elaborate on that. Thank you.
Thank you, Christine. Thank you for the question. So the deferred retirement benefit starts having the cost of living adjustment applied at the point when you reach age 55. I think that's the simple, straightforward answer. So even if you haven't started receiving the payment yet, the cost of living adjustment will be applied from that point.
Thank you. Very clear, I think. Another question is also about deferred retirement benefit. So the question is, if I elect a deferred retirement benefit, and I'm not yet at the age of early retirement, so I opt for the deferred retirement benefit, I understand I no longer have the option to make a full withdrawal after having elected the deferred retirement benefit. However, would I still have the possibility to take a lump sum as part of the deferred retirement benefit? Over to you.
Thank you. So if I understand this question correctly, you are asking if you take a deferred retirement benefit. Of course, we're talking about all of us or all of you who separate before early retirement age. So you choose a deferred retirement benefit. It hasn't started into payment yet. And then you want to know if you can take a full withdrawal. So if the benefit hasn't been paid yet, if you're not starting yet to receive your deferred retirement benefit, we do allow you to say, I actually want to now receive a withdrawal settlement, because your benefit hasn't started being paid yet. So you can still say, I want to receive a withdrawal settlement. It's not part of the deferred. It's actually the other option that you had when you separated. If you do choose to take a deferred retirement benefit, and then you change to say, I just want it as a withdrawal settlement now. That's possible, but please be aware that there are different conditions. We wouldn't let you restore it as we would otherwise if you did come back into participation. So I'm trying not to confuse it too much, but you can take a withdrawal settlement, but you cannot restore it as a normal restoration if under this scenario that has been asked. I think yes, I see you've also added the comment there. Yeah.
Yes.
So if it's about lump sum, I see you've said it's not about lump sum. There's never a lump sum with a deferred retirement benefit. So that's another thing to clarify. The deferred retirement benefit is a monthly benefit only, no matter when you start receiving the payment. But there's never a lump sum option with the deferred retirement benefit. Okay.
Thank you. Very clear. So no lump sum, deferred retirement never includes a lump sum. Well noted. The next question, still about deferred retirement, is the question, what happens if someone elected a deferred retirement benefit and then passes away? Would their survivors be entitled to anything?
Okay, so if you have the entitlement to a deferred retirement benefit, even if you haven't started receiving the payment yet, and you're married to the person that you were married to at separation from service, then that spouse would be entitled to a surviving spouse's benefit. So just as a reminder, there's no child's benefits with a deferred retirement benefit. There's only a surviving spouse's benefit. So under that scenario, yes, a spouse could receive a survivor's benefit.
Perfect. So that's clear. Yes, a surviving spouse would be entitled, provided they fulfill the conditions of our regulations in the fund, but never a child's benefit. Thank you. Next question is about, hold on, I'm interjecting. There are a few questions whether we can record this session. The answer is, of course, we did record this session, and as Denise said, the session and the presentation that Denise made are going to be published on our website under the Pension Town Hall webpage that is also that was also mentioned by Denise. So yes, the recording will be available either today or tomorrow. Back to the questions about part-time. A question, will my retirement benefit be reduced if I worked part-time 50% during the last 5 years of service, or at any time, basically, during my service?
Okay, thank you. I hope it's not too difficult to illustrate. I'll try without the slide. But the answer is yes. If you work part-time, that means you're not paying full contributions for that period that you're working part-time, and that will ultimately have an effect on your pension. So, for example, you have to be at least 50% part-time to be eligible to contribute and be a participant in the fund. So let's say your 50% employment is during your first 5 years of service, and then the rest of your career is 100%. So if you'll recall, I know it wasn't we didn't focus a lot on it, but this rate of accumulation, which goes along with your contributory service, this is percentage, which we said was a maximum of 70%. That's used in the retirement benefit calculation. The part-time that you worked will be factored into that part of the calculation where we look at the first 5 years times 1.5%, for example. So if you're working only 50%, your calculation is going to be at that same ratio for that portion of time that you were working part-time. And that ultimately will factor into the calculation of your pension amount. Now, with the rate of accumulation, there were different brackets. So the first 5 years was 1.5%. The next 5 years was 1.75%. And then thereafter, for a period, it was 2%. So if you consider that, you can see that working part-time later in your career, when the rate of accumulation uses a 2% factor, would have a different effect from if you were doing part-time in the beginning when it was a 1.5% factor. So I guess in short, it will have more effect if you do part-time in the later part of your career. It will reduce it more.
Understood. So if I just summarize, basically part-time work of at least 50% will have an impact on retirement benefits because it will proportionately reduce for that period the rate of accumulation. Is that right? Thank you. Another question. This is about, again, death. In this case, what happens if someone elects to avail of the deferment choice under Article 32 and defers making a benefit election / payout for up to 36 months and passes away within those 36 months, either with survivors or without survivors? So I guess two scenarios. Maybe number one, what if someone passes away during the deferment period without any survivors? And then second, what if they pass away during the deferment period with an entitled survivor?
Okay, thank you. So generally speaking, if you don't have any survivor who would get a survivor's benefit from the fund, in this scenario that we talked about today, the deferred retirement benefit only has a surviving spouse's benefit. So if you were to pass away during the 36-month deferment period, and I'm sorry, I forgot which we were going to do first. If you don't have a surviving spouse, you don't have a spouse, that means there's no one set to receive a survivor's benefit in the event of your death. So the benefit that would be payable in the event of your death is the residual settlement. So that's going to be the balance of your contributions and interest paid to your beneficiary. So that's one way it will be handled. If you have a spouse who's going to be entitled to a benefit in the event of your death and you pass away before you have started to receive your retirement benefit, and it's within this 36-month period, even if you didn't make an election, but you have at least 5 years of contributory service, the fund would assume that you would have this deferred retirement benefit, and could be the surviving spouse would receive a survivor's benefit. So Christine, if you have anything to add to that, please go ahead. I don't want to make it too complicated and go into too much about the A2 at this point, but that is almost like a topic in itself that we should have a session on.
Yes, you're right. It is a pretty lengthy topic, but I think just to summarize what you said, basically the amount of your contributions and the interest you earned will never be lost. Either it is paid as part of the survivor's benefit that might be payable, or if there are no entitled survivors, then we would pay whatever this amount might be that you contributed plus the interest that you earned to either a designated survivor on this Form A2 that Denise mentioned. So you have this form that hopefully you have filled in, and if you haven't, you should do it and submit it inside your member self-service. But if we have that form, we would pay that amount of money as a so-called residual settlement to the person or people that you designated on the form. Or if we do not have that form, we would request an executor of the estate to be nominated and paid to them. So I think the bottom line is that money that you contributed and the interest will never be lost or remain with the fund, but will go either to a designated beneficiary or will be part of survivors' benefits that we have to pay in line with our regulations. All right.
Thank you.
Next question. There's a question about adjustment for cost of living. So the question is, when you talk about adjusting for cost of living and cost of living increases, does this mean the benefit increases and decreases depending on the country of origin? And I think country of origin maybe means depending on where the person is from, or no, where the money is coming from, so United States. How is this calculated? How does this work? I'm aware this is, of course, a topic in itself again, but maybe just a very high level explanation of how we generally calculate cost of living would be helpful. Thank you.
Thank you for the question. So the cost of living is an adjustment that's applied to monthly benefits. And by default, with the pension fund being a US dollar-based fund, the cost of living or the consumer price index in the United States is what is used to apply cost of living adjustments to UNJSPF pension benefits. And that's only if there's been an increase of at least 2% from the time of the previous adjustment. In last month, there was a 2.8% increase to pension benefits to our retirees and beneficiaries. Now, it's generally an upward increase, but it's possible that there could be theoretically a decrease. In some countries, there have been decreases, and without going too far off topic, because that's an entirely different session that we've had about the two-track, which is an optional system that you can choose to go on, where your benefit is calculated based on the consumer price index of your country of residence, assuming you're not living in the United States. And it's possible that then there could be a decrease in either one of those countries. But in that system, the two-track, your benefit according to both of those tracks is compared. So you would have the consumer price index from the United States and with your country of residence applied and compared. I think I'll stop at that.
Yes, it's good. It's just, I know we can go on and on about cost of living, right? But I think, again, you summed up the principle, which is that our pension, our retirement benefits are adjusted based on cost of living adjustments. And for the vast majority of beneficiaries, it's adjusted based on the movements of the United States Consumer Price Index. So indeed, if it dropped significantly, there could be a negative adjustment. It has never happened. I think never in the pension fund's existence has there been a negative adjustment on the US dollar value. But in theory, it's a possibility, right? So far what we've seen is only upward adjustments. I am looking at something that would be relevant. There's a question, it's a very practical one. When will we get the 2024 pension statement? I know you answered that, but maybe we repeat it here.
Thank you. So this 2024 pension statement should be available to you before the end of May. I'm thinking it's going to be around the 19th or 20th, but I would say to be safe by the end of May.
Yeah. Good, great. Yes, so hopefully, maybe earlier, but definitely by the end of May, you should have your pension statement inside your member self-service. A question about running estimates. When running an estimate, how soon would the estimate system pick up an increase in my step and increment, basically my pensionable remuneration or my, how soon would that be reflected in my estimate?
Great question. So I'm going to connect it to this discussion about the pension statement. So as we're saying, your 2024 pension statement is going to be available too soon. That's with the balance and the information of your pension as of December 31st, 2024. That is the most recent data that's pulled to use in your estimate. So if you had a promotion in March this year, it's not going to be pulled in to your MSS estimate. So that's something to be aware of. And when you look at your pension statement, and on the bottom right where you see the pensionable remuneration rates, and you'll see the most recent one, which would be effective the 31st of December 2024. So I'm talking about the statement that you'll see very soon. That pensionable remuneration rate is what is projected up till your separation date that you put in the estimate module, and assuming that that would be your pensionable remuneration rate until your separation date. That's how our estimate module works. So when you have something that's happened recently, it's not going to be factored into the MSS estimate.
Great. Thank you so much. So I guess we could say the estimates we receive in the estimate tool are pretty conservative, right? Mm-hmm. Yeah. So they are probably a little bit underestimating, if anything, rather than overestimating, at least in the vast majority of cases. Thank you. I think that's clear. Next question. Oh, the rollover question. I know we had that yesterday too. So again, can we roll over a withdrawal settlement into an IRA? So this is a very US specific question. The answer, Denise, please.
I can answer yes. The answer is yes. And we do have a bit of information on our website about rolling over to an IRA. So I think without having the web site open in front of me, I would say to go to the search bar of our website and type in rollover or IRA, and you'll find the information about it. But yes, it's possible.
It is possible, absolutely. And I guess generally speaking, I know that oftentimes the rollover is not necessarily direct, meaning we roll it directly into your IRA, but you will receive the payment and then roll it over yourself. But for this, as Denise said, we have some information on the website. And if you have questions in this regard, please contact the fund so we can give you more specific information on how to complete your payment instructions and how to request this kind of rollover. But it is possible. There's a question. I know we are at time, so it is past and 90 minutes have gone by, which is the allocated time. We do have quite a few more questions. We will not be able to cover all the questions, but if anyone is willing to stay on, and Denise, you're willing to do maybe another 10 minutes, we can go through more of these questions if you find that beneficial. But the official portion, let's say, of this presentation is over. And if you need to log off, please feel free. But if Denise, do you think we should go on for a little bit longer?
Yes, I think we can do maybe 10 more minutes. If we think we have enough questions to keep us busy.
We do. Great. Okay, so I'll continue. There is again a question. I think it might be useful to talk a bit more about survivors' entitlements. So there's another question about in the absence of a spouse, where will the surviving spouse's benefit go? Can it be assigned to a nominated beneficiary? In other words, can you, if you don't have a spouse or ex-spouse that might be entitled to regular monthly payments as survivors from the fund, so if you don't have a spouse, could you then designate on that form someone else to receive the surviving spouse's benefit? Denise.
Okay, so there's a few things to consider here. If you don't have a spouse who would be entitled to the survivor's benefit, you don't have the option to say, well, I want that benefit now to go to my adult child. I want my adult child to get the equivalent of a surviving spouse's benefit. So that's not possible. If you don't have anyone who would be entitled to a surviving spouse's benefit, and we didn't touch upon it, but there is such thing as a divorced surviving spouse's benefit. So you'll see that information if you look at survivor's benefits and so forth on our website. But let's say you don't have anyone who would be eligible for that. Then, as we had, I think, had a similar question, that the amount of your contributions and interest would be paid to whomever you designated as a beneficiary. But that's assuming you haven't already received, in the form of your own deferred retirement benefit, the equivalent to what you paid in with the interest. So I'm sorry if I already missed the exact question, but if you elected a deferred retirement benefit and you were already paid out the equivalent in monthly payments, monthly pension benefit payments, the equivalent of what you had contributed to the fund with the interest, then there's no residual amount payable anymore as a residual settlement in the event of your death. So that's another thing to consider. However, if there is a residual amount, either all of it or even a portion of it, that could be paid to the person or persons that you put on this A2 form, the designation of beneficiary of a residual settlement.
Thank you. I think that's clear. So I'll be the voice of the audience. So I understand that you cannot assign any form of monthly survivor's benefit to someone else who is not entitled under our regulations. However, if there is a remainder of your own contributions and interest still in the fund unpaid, then that would constitute a residual settlement that is payable to whomever we designated on our form A2 or the estate if there is no A2 form. Great, thank you. A question that's a bit more practical. In what currency can people be paid? Is it only in US dollar?
No. So it didn't specify whether we're talking about payment of a withdrawal settlement or payment of a monthly benefit, but you can choose to be paid in other currencies. If you are choosing a withdrawal settlement, you can be paid in a different currency. If you're taking a deferred retirement benefit, you can also choose a different currency from US dollar. We have 18 currency or payroll currencies that the fund pays, which would be those that we have a specific exchange rate. So we would convert and pay in that currency. But outside of that, it would be converted, say, from your bank's exchange rate if it's something beyond our payroll currencies. And the list of currencies, I believe, is also on our website. But I guess in short, the answer is yes, you can put the currency that you want to be paid in on your payment instruction form. And if you're receiving a monthly benefit and sometime down the road you move and you want to receive your payment in another country or another currency, you can request the change.
Thank you. Very clear. So I guess reminder, as Denise said earlier, when you complete your payment instructions, make sure you put the currency in the designated field on that payment instructions form so that you receive it in the currency you wish. Another question, and I know your answer, but we will ask it because I think a lot of people may have questions about this. Taxation. I know you talked about it in your presentation, but there is a question, Is my withdrawal settlement tax exempt or not, or partially? How about retirement benefits? So it's basically a question, can we advise on taxation?
Okay, you'd like me to take the question? Okay, so yes, our standard reply is, unfortunately, we don't advise on tax matters because we don't have the expertise to know the tax rules or laws of all the different countries where our retirees and beneficiaries reside. We do have some tax information on our website. There is some specific information for US tax, people who are obligated to pay taxes to the United States. I don't know, Christine, if you're putting the link there to that page, but we can add it. Okay. And barring that, it's possible. I don't mean to reel in other teams to get queries, but we do have the income tax unit, the tax unit of headquarters, that if you look on their website, you can also find some information about pension and taxation. And I guess one thing just generally related to taxation is what we do at the fund is we can provide a yearly statement to you once you're in receipt of your monthly pension benefit that you can use when you submit your tax forms to your tax authorities. So currently you need to request this for the first time, and then thereafter we would automatically produce this tax statement, or called pension statement, every year that you can use when you have to file your taxes.
Great, thank you so much. A couple more minutes, one fairly quick question. Can I get my withdrawal settlement paid into my UNFCU account?
Thank you. That is, yes, you can have your withdrawal settlement paid into that account or another account. But yes, as long as the account has your name on it. So you can have it as a shared account, but your name has to be one of the account holders of that account, or of any account that you have your pension paid to.
Perfect. Thank you so much. Another question, also fairly practical. How soon before separation or after separation should we start submitting the required documents from us participants? So is there a timeline that is ideal, and how soon before or after should we do that?
Well, assuming that our audience is going to be choosing either a deferred retirement benefit or a withdrawal settlement, then we're going to need from you your payment instruction form, your bank document, and your ID document. They have to be valid. I mean, ideally, the payment instruction form is less than a year old, but ideally it's much more recent, that you could submit it within the month or so of separation. I mean, as I reminded you, that we can't process your benefit until we have all the other documents from your employer. So even if you do submit the payment instruction form a month early, we can't action it until we have all of the documentation. So I would say, if you are taking a deferred retirement benefit, gather your marriage certificates, a copy of that, a copy of the ID document of your spouse. If you have any prior marriages or divorce or death certificates of a prior spouse, that information you can upload through member self-service, document upload, and it will be on your file for when your benefit is ready to be processed. And if you are with an agency, then if you're not able to submit through MSS document upload, that you just make sure you have the information also reported to your employer beforehand, before you separate, and that you have those documents, the copies of the certificates and so forth. So just to say, I think if you start within a few months of separation, it's sufficient for that purpose, and we don't want to have documents that are submitted too soon, because we would want to know that your ID document still needs to be valid. It can't have a past expiry date, ideally. I don't know if you can think of anything else to add there, Christine, but
no, I think it's clear. So I think I hear that you say don't submit it too early. Maybe 2-3 months before is the earliest, but you can also submit it a month before, a couple of weeks before separation. And remember, Denise explained that we also have to await the documents from your employing organization. So the fund can't start processing until we have your documents plus the organizational documents. And those are usually released only after separation. So if you submit your documents close to your separation date, that should certainly be fine. But maybe, as Denise said, start preparing to make sure you have all the supporting documents you need. You're fully clear on your benefit election and which benefit you want. That preparation can start earlier, so you make sure you have everything ready when you want to submit the documents. And as Denise said, make sure you coordinate with your organization, or you follow the instructions from your employing organization on how to submit your documents, whether that is via member self-service document upload feature. So you can do that, or maybe your organization says, no, we want to gather all the documents, yours and the organizational documents, and submit everything together from the organization. So just follow the instructions that you're getting to make sure it follows due process. And I think we are now at time, but one last question and then we close the Q&A. There's a very practical question, and I know you actually have all that information in your presentation, Denise, but just here, because maybe others have that question, how to go about if I have any issues with accessing my member self-service of the fund, if I have lost login credentials or some issue with member self-service, what should I do?
Okay, thank you. So this will be, I guess, our last question. And
Yes.
Okay, so if you have any issues with member self-service, there is a dedicated email address called msssupport@unjspf.org, or you can go to our contact form. You go to the Contact Us tab on our website, and then you see the contact means of contact there. You could use that to submit your issue. But as I said, we have a specific email address for MSS support,
which you included in your presentation.
Yes, it's there. Mm-hmm.
Great. Okay, so with that, I end the moderation of the Q&A. I know there are many questions we got that we did not answer directly, but I do see also that a lot of the questions were for similar topics. So hopefully you covered most of them. Unfortunately, we can't guarantee that we answer all of these questions in writing because we have very limited staff. We will do our best, but maybe for those questions in here that were about early retirement and normal retirement, you may wish to attend tomorrow's session. Back to you, Denise, for the closure. Thank you so much.
Thank you. Thank you so much, Christine, for moderating the questions. Thank you to everyone for attending and your attention. I see there's still quite a few of you here, and I'm sorry we don't have the possibility to stay on and answer all of your questions, but I would again highly encourage you to take a look at our website and the videos. Start there, look at some of the pages related to separation or benefit options, and see if you can find the information that you're looking for. And barring that, you can reach out to us through the Contact Us page, or if you're from an agency, you reach out to your SBC secretary, and we're here to support you as you go through the process if you're preparing for separation. So thank you again for your attention, and hope to see you at one of the other sessions if that also would be of interest to you. So thank you all. Bye.